subject, wealth and income inequality, are the biggest moral crisis. I'd also say it's a spiritual crisis in America today, all around the world. This gap between the rich and everybody else is reaching critical proportion. And I think one of the biggest crises is the young people. Today's young unemployed become tomorrow's unemployable. They lose valuable jobs and training skills. So what's happening in America today, savers are losers. You know, most parents say to the kids, go to school and save money and work hard. But in 1970, when I graduated from school, $1 million at 15% interest earned me $150,000 a year. Now, you could live on $150,000 a year back then. But in 2016, due to this thing called quantitative easing, I call it the Greenspan put, it's $1 million at -5 basis points. It's going to cost you $1 million to save $1 million. That is how deteriorated our financial systems have become. And this is one of the causes between the gap between the rich and the poor. Another thing is that fewer and fewer families are receiving middle-class income. It's going down. Every time we shop at Walmart, we ship dollars and jobs over to China and Pakistan and all the other countries. That's capital. Another thing that's happening when people's incomes go down, they become dependent. Now, the U.S. government tells us that poverty has been beaten in America. Well, maybe poverty has been beaten, but what has increased is the entitlement mentality, the attitude that the government and other people should take care of me. As I said, it's a moral crisis as well as a spiritual crisis. I learned in Sunday school, give and you shall receive. And too many people today think they should receive. This is the other crisis here, is Social Security. Being Japanese, the Japanese call it, Social Security. But anyway, I've met so many people my age, there's about 75 million baby boomers. I'm at the top of the baby boom chain. We expect the government to take care of us. That's a lot of highly educated people. That is a crisis. So in 2002, I published this book, Rich Dad's Prophecy. 14 years later, the prediction was that 2016, there'd be a global financial crash. We're in 2016. And here we are in 2016. You can see it coming. In the first 10 years of this century, we have had 3 major crashes. In 2000 was the dot-com crash, followed by the 2006 real estate subprime crash, and then 2008, the banking crash. The question is this next? This is the giant crash of 1929, and every time I listen to those guys on CNBC, I call it bubble vision. They keep talking about the giant crash of 1929. I tell you what, it didn't compare to this one coming. So that's why I write and I speak, and I'm very concerned about our futures, our well-being, and the state of the economy. But I'll explain some of the tricks of the trade, why guys like me get richer and everybody else. And this is quite interesting. This is one of the reasons the rich are getting richer. These are the Bush tax cuts. The biggest tax cuts goes to the top 0.1%. Thank you, George. I appreciate that. I'll start by telling you what it's not. Financial education isn't saving money and investing for the long term in the stock market and getting out of debt. Exactly the opposite. So my financial education began with a game of Monopoly. You know, we all know the formula, 4 greenhouses, 1 red hotel. So when I was 9 years old till I was about 20, Rich Dad and I and his son would play Monopoly. And that's how I learned to become a rich man. What makes something an asset or liability is the two most important words in business: cash flow. Which way is the cash flowing? So an asset, if the money is flowing into your income statement, it's an asset. So my rich dad would say, if money is flowing into your pocket, it's an asset. If money is flowing out of your pocket, it's a liability. So the average person, they go out and they buy a house and say, oh, it's an asset. But every month, it's flowing straight to the bank. So your money flows straight to the bank. Not that intelligent. You know, I want the money to flow from the bank to me. So it flows to the bank. Or what they'll do is they'll buy a stock or a bond or a mutual fund, and it's an asset, and it flies straight to Wall Street. Not your asset, it's Wall Street's asset. And the third line, when you look under expense, first line is tax. So the average employee, like my poor dad, with a high-paying job, the money comes in, goes straight out to taxes and to the government. Makes sense? So when you get a job, first line, taxes. Second, mortgage to the bank. Third, your 401k or your IRA, straight to Wall Street. But you think they're assets. It's not, they're assets, but they're not your assets. So that's one of the big things my rich dad taught me is you got to control your cash flow. You want the money flowing into your pocket, not out of your pocket. I'm a high advocate of financial education, which is not taught in school. So in ’74, I took real estate courses. I also had to take options trading. So there's fundamentals, which are financial systems, fundamental trading, but there's technical, there's ups and downs. So when Bitcoin the first time hit 20,000, I watched it.
and it traced back down, I think, to 1,000. And I should have bought, but I was afraid when it hit 1,000, it would go to zero. So it came back, it hit 6,000. So I knew it was picking up momentum, as a trader would say. Trader, not a trade-to. And when it hit 6,000, I bought 60 of them. So I'm in the money. So today it's around 17,000. I'm still in the money. So the lesson is, and this goes to all your listeners, your profit's made when you buy, not when you sell. So I'll ask you again, if Neiman Marcus had a sale on Gucci and Prada and all that stuff, you would have said, no, it's too cheap. I want it to go higher. Well, that's what people do. Oh, I want gold to go higher, then I'll buy some more. Nuts. Bitcoin goes to 1,000, I'm going to buy more. And I'm very optimistic and bullish on blockchain. So if Bitcoin, Bitcoin is, if it goes down to 1,000, I'm backing up the truck. But if it goes to 25,000, I'm not buying anymore. So your profit's made when you buy, not when you sell. And that's why all these gold people are saying, well, the price of gold hasn't gone up. I said, well, what are you waiting for? You know, I remember in 2000, gold was $300 an ounce. You're going to wait for it to go to 3,000 or 30,000 an ounce before you buy? But that's what stupid people do. They buy at the top of a market. They all jump in like idiots. I'm waiting for the next crash. The same as real estate. You know, real estate's crashing right now. I get very excited about it, going, boy, everything's going on sale. And that's how I think. I don't want to pay retail, I want to pay wholesale. It's common capitalism. I think what Jim Rickards is warning is we're going to CBDC, central bank digital currency. It's a surveillance system. So China already has it. If I use my CBDC, my Fed coin, to vote for Trump, they'll come get me. So the reason I own gold and silver coins, it's money. This is Andy Schectman saying that. And I can spend it. So if I want to pay you in silver, I can pay you in silver, or I can pay you in Fed. So I just want to have money that's real, God's money, gold and silver. That's why I have a gold mine here. I practice what I preach. My first gold mine on the New York Stock Exchange, the other two were in Toronto Stock Exchange. And immediately after I found gold in China, the Chinese nationalized it. I know what communism's like. I fought them in Vietnam, and they stole my gold mine in China. So I stay in America.